Hey guys, happy Sunday morning. Happy last day of the month. Happy fall is here starting tomorrow, September 1st. Today I thought we would look at the single stock funds. Those seem to be the most popular, the GUIs of the world, GOOY, GOOW. Any of those single stock funds, TSLW, TSLY, TSLP. We're going to look at all of them today. And there's 4 companies that are primarily doing issuing these ETFs. And we're going to talk about the different philosophy from each company really quick, or as far as each strategy goes. Let's get that out of the way really quick. So, GraniteShares. Okay. These guys, they all have a slightly different way of trying to do the same thing. These guys are generating a premium to pay to shareholders by selling options on, in this case, these guys sell options on leveraged ETFs. So this is a SPY-based fund, YSPY, but they sell options on SPXL, which is a 3 times levered S&P fund. And they sell in the money puts, but that's synthetically the same thing as selling a covered call that's out of the money. So what's not to like? And these guys do a great job. I really like these guys. I can't believe I haven't really noticed them more. I got like 5% or something, a small amount, just to kind of track it the day it came out, YSPY, and I should have got more. But anyway, okay, so that's GraniteShares. So they don't use leverage, but they sell in the money put spreads on leverage products. Okay, here is Roundhill. And here's all the tickers, AAPW, AMDW. These things are built for speed, and these things get a lot of upside. They use 20% leverage, weekly leverage. They try to get 20% extra per week out of the upside of the stock. And they claim they don't sell premium, but they enter into a swap agreement. But someone's selling premium somewhere. Maybe they don't, but the money they're paying you, there's no such thing as free money. The money they're paying you comes from somewhere. It comes from the counterparty to the swap. Well, I bet you those guys are selling premium. So anyway, indirectly, the whole world benefits from premium selling indirectly. But anyway, that's these guys' deal. They get 20% extra upside. They say they don't sell premium. And in fact, old Dave Mazza wrote a story back in February, wrote about this entire strategy and explains it. And does a pretty good job, and even goes into the swap and stuff. And he even says in here that the swap, let me read this. He even says in here they use the implied volatility and several other inputs the swap counterparty does to figure out how much to pay. So the leverage is easy to understand, but this is a really good article. It says it right here. It says, very last sentence of the whole thing, right before in conclusion. How does this ETF distribute cash? I tweeted these guys and asked them that, but they didn't respond. They could have just sent a link to this article. This explains it right here. How does this ETF distribute cash? Roundhill is designed to set of parameters based on both implied volatility and weekly stock performance to determine ETF distributions, which will be distributed to ETF holders on a weekly basis. So what I'm saying they're doing is what they've really done is reached an agreement with their swap counterparty. And I bet you they look at the implied volatility of S&P options or whatever they're doing it on. And I bet you that, I know that's in the swap formula. So they get paid more on weeks when IV's higher and less on weeks. And also they can build the leverage into the formula. but the swap, I mean, they just have a formula. They probably pay him a formula that's based on the IVs. So in other words, yeah, they aren't selling options, but they're still benefiting from the IV. And I would bet you the swap, their counterparty selling options, because the counterparty's having to give them money to pay. The counterparty's having to pay off the swap. I mean, I guess the counterparty, I bet you anything, the counterparty's selling options. So I think this whole deal about whether Roundhill selling options or not, it's not a huge deal. I guess they aren't directly. But you could also say the same thing from blocks, because they're selling puts. You could also say a fund that sells puts and maintains a long position is in the same position as this. Anyway, we aren't even going to talk about blocks today. We're talking about single names. Okay, so that's Roundhill. Here's Rex. These guys do a good job. These funds are real new, but they only write on half the fund. But on the other half the fund, they use between 5 and 50% leverage. So they use a little bit of leverage also, but they only sell options on half the fund. They use the public market. They do, it's just like YieldMax. They have on a combo with the flex option for those short puts so they don't get exercised, and then they sell options in the public market. But anyway, so this is CO. All of theirs end in II. So that's Rex shares. And they call it their growth and income series. Let's see what they have out right now. But we're going to compare all of these. So right now it looks like they have 4. CO2, MS2, NV2, TS2. All right, and then the last one, of course, is YieldMax. You guys know how they do this. They're they've been doing this forever, doing on 100% of the portfolio, no leverage, just buy a combo, use flex options, sell options in the public market, and they do covered call spreads. But in any event, they do a good job. But we'll see. Each of these different strategies have strong points and weak points. So, and a good way to try to look into that kind of stuff is something called StockTools. This is StockTools.app. My friend Rob developed it, and Rob's a really sharp guy. But today we're going to use StockTools to compare these high yield ETFs. And so I've checked the GraniteShares, the Rex, the 4 we just talked about, the Roundhill weekly pays, and the YieldMax. All right, so let's go, and we're going to start on, let's go with 1 week, but then we're going to go to 1 month. All right, so 1 week, and this is going by ETF return. It doesn't take into account if the ETF beat the underlying or lost by 1 million points the underlying. This is just how well the ETF itself has done. Snowy, of course, had a huge week, 14.79%. Babo up 6%. Winter and Fiat don't count because they're inverses, or they aren't counting for the purpose of this. We're looking for bullish ones. Then we have the first one from Roundhill, GOOW. That one's underlying is Google, and that has the whole package or whatever, because it beat the underlying by 1%, and it paid a 3% yield, and it was up 4%. Good job. But that's what I'm saying. So this is the Roundhill fund. That 3% yield doesn't come from nowhere. If Roundhill's not selling premium, someone's selling premium. I mean, I would sure think. I wouldn't think these guys would just be selling shares, but I guess they could do whatever they wanted. Let me know what you guys think. I just think the controversy itself's a little overblown. It's just a different way of doing the same thing. Swap, public market. It's just a different way of doing the same thing. Anyway, then we have RBLY in Carvani from YieldMax. GDXY from YieldMax had a great week. It underperformed its parent, but still had a good week. GUI, XOMO. All right, so we have a lot of those. A lot of those did good, did well, but and they all have good NAV stability. Let's see the ones that have outperformed the parent by the most. Okay, winter and fiat and dips don't count and crash because they're inverses. But Morrow is put into non-Mara just over a week's time, but SMCY and Coney also look really good. Here's that MS2 and CO2 right together. Those are the first ones we've seen from GraniteShares. Here's NV2 from GraniteShares, beating the parent. All right, now let's look at a month. StockTools.app /max is my code. If you want to sign up for this yourself, I think it's pretty good. I think it's really good. It's amazing. I don't ever have to go to this again, is what's amazing about it. Rob has built this for me, but on steroids, and put it inside of StockTools. Let me just close that. It's everything you need in one spot here. So, all right. So the 1 month report. Look at this. Well, okay, winter and fiat don't count. XBTY. Wow, that's really interesting. That's from GraniteShares. That thing's doing really well. It was actually up this week at a time when Bitcoin was down 5%. Selling those leveraged in the money puts. That's what they do. That's what they do. They outperformed their parent by a huge amount, and over the course of a month had a 9.5% dividend yield. I don't know if they got 2 payments in, or well, that's weekly probably, isn't it? Well, anyway, whatever. But that's a huge payment. But then we have SMCY that did really well. But just because SMCI was down so much, and it was down a little bit less than its parent, so scratch that. But then we had YSPY. Look at YSPY beat the SPY. See, this is like this dividend thing on steroids. It can show you everything. It can show you everything that other thing can here, but just all in one spot. All right. Well, I think you're going to have to. I think XBTY and YSPY have to be considered for funds of the month. But I don't know. I mean, here's NVYY. These guys have something to say about it too. So this is based on NVIDIA. This is from GraniteShares. So they're selling in the money put options, put spreads nonetheless. On NV, I think it's NVDL. It's NVIDIA long. It's been working out well for them. Look at them outperforming the parent. Because obviously it's been a good week for NVIDIA. Or a good month. I'm sorry, a great month for NVIDIA. Not a great week for NVIDIA, but a great month. Now over here, this says declining. I wasn't involved on making the NAV stability. I don't know what goes into figuring that, but I mean, other things being equal, yeah, we want ones that are green. So I mean, YSPY is the whole package. XBTY and BTC, it's NAV stability. We're going to give it a break, though. I think that I'm saying XBTY, YSPY are the funds of the month for sure. And just because I love indexes and stuff, but in the single stock category, we'll let's look at NVYY against NVII. So NVYY from GraniteShares got 3.91% total return. The REC shares, and they only do a half override, but they do use like 50% leverage. They got 3.07%. They both of them beat the parent. But just on dividend here, then look, that's what I mean. The GraniteShares one is paying an obscene dividend. Holy cow, NVYY. Now that's is GraniteShares weekly or monthly? See, that's where this comes in. So good income analysis. It's probably because it's a Sunday. I can't get my stuff to work on Sundays, but it does look like, yeah, they're weekly. I mean, that's cool how you can at least see the payments here and see 52, 52, 51. Boy, if I was looking for a single stock, it would definitely be NVYY or NVI. Let's go look at, and then here's the MSII, but that just got on here because Mr. was down so much and it was down less than Mr. I mean, which is good. I mean, that's good to know. But on the single stocks, we'll just call it a tie between NVII and NVYY. But we'll just do this. Oh, but here's this dividend calculator. So that Rob built into this. So it's on detailed analysis. When you click on it, it'll show you who does better, with dividends reinvested or without. But then right here is basically all the stuff that other thing shows you. And I use that all the time, the starting price, ending price. So right here, you can see on this NVII, well, it hasn't been around very long, but its NAV is actually up 2 cents. That's good to know. But it just has everything that you possibly need to know. And then this is just comparing it with the parent, and you can just see the total return and the annualized income. And I mean, anyway, so let's just line it up by dividend yield. Look at TSYY, 13%. I mean, are you kidding me? I mean, of course, we don't want to just get obviously, this is why you don't yield chase. The ones with the highest yield, lots of times are the ones that are a problem. And here's this XBTY on here that's getting the declining NAV stability. But I mean, it is what it is. I mean, Bitcoin's been selling off and they can only do what they can do. Here's this NVYY, paid a 9% dividend. These dividends are obscene. HOOW. So yeah, Roundhill may not sell options on Hood, but somebody does. This 9% just didn't come out of nowhere. I just don't believe they're just selling the stock. I mean, I guess they could be, but I just don't believe their counterparty's just taking the money and selling the stock. I guess they could, but because this money, that's a lot of money, and it doesn't just come from, and you can't really get that kind of money anywhere except the options market in super volatile and super liquid tech stocks like Palantir. That's the only place you can get that kind of money. So even if they aren't doing it, they're benefiting off it indirectly, and they're benefiting off it pretty well. Look at HOW, PLTW outperforming the parent. As far as the full package goes, I mean, it may have to be this month TSLW if you just wanted to look at something that did all the way across. Rob needs to make a category an overall winner. Because that's what I always do. I just go through but I'm just looking for the best overall winner, and with green across the board, and it would probably go to TSLW. All right, well, there's something for everybody. The single stock funds of the month are TSLW, COII, and NVYY. I mean, those are all good funds. it comes down to anything else. It comes down to picking the right stock, right? I mean, that's all it comes down to is picking the right stock. Any of these could work out. I mean, what I'm really looking forward is WPay. When WPay comes out, I'm gonna definitely get it because these are definitely awesome. This is awesome, and Blocks is awesome too. Blocks also has a scheme where they don't cap upside, but they can still pay a yield. So, but if you guys are interested in it, I would encourage you to read what Dave Mazza said. But it seems pretty straightforward. Listen to this. It says, in conclusion, both covered calls and levered weekly distribution strategies can generate favorable returns. So that's why they're calling this a levered weekly distribution strategy. And I guess that's fair. But it says in different environments. So this is because there's covered call strategies tend to outperform its benchmark in down to neutral markets, and they tend to underperform in up markets. I think Dave watches this show. Dave, if you're watching this show, you don't be a stranger. Check in on Discord, and love to have you on the show sometime. Anyway, maybe we could figure all this stuff out. But yeah, of course, they underperform in up markets, whereas a levered weekly distribution strategy will outperform the benchmark in up markets and underperform in down to neutral markets. Okay, so I guess that's fair. I mean, so maybe they are selling, or that's what would happen if you sold stock, I think. If you just sold stock, which is what people are accusing them of doing, you would underperform in neutral markets for sure, in down markets, because you would sell stock and then the market would drop and you have less stock to sell. And so I could see them constructing a strategy like that. So you could also say, the same thing with Blocks. Maybe what they're doing is synthetically what Blocks is physically doing. Really, when you think about it, I mean, the money's not coming from nowhere, but maybe that's what their counterparty's doing. Their counterparty may be selling lightning spreads or selling put spreads to generate that income, where they can construct a swap for them that outperforms in up markets and it underperforms in down to neutral markets. You heard on my show the other day, Wednesday, David said the same thing about Blocks. He said, yeah, the one drawback to that strategy is when the market goes down, we'll go down a little bit more, basically something like that. And that's the true, because you have stock and then you're selling puts. So there's no free money. I mean, yeah, you don't cap your upside, but still in a down market, you have a little extra. You can lose a little extra. So it's just kind of the way it goes. All right, guys. Well, I appreciate y'all for being here. I hope you like my picks. I was trying to think of a good show to do at the end of every month. I do the max factor at the end of every week, but at the end of every month, I thought it might be good to do something like this. And then also, we're just going to select everything and look at an overall winner right here on the month. Okay, you'd have to be YETH, but they didn't beat the underlying, but I mean, it's the full package. AAPW, GOOW. I mean, these W funds are definitely competitive, and they're doing exactly what they're designed to do. In an up market, they're doing a little better. Apple was up 14, this thing's up 17, and it paid a 42% yield. That's what they're doing. Their counterparty's just selling put spreads and giving them the 42% to pay the yield with. It's a great arrangement. I figured it out. All right, so overall winner, when you just throw in everything, I think you got to give it to I think you got to give it to YETH. That's amazing. A 19% total return, and it's paying a 62% yield. Holy cow. I mean, this thing's insane. Because I just love indexes. And I really think YSPY is doing a great job. A surprisingly good job. All right. Overall winner is definitely YETH. But hopefully there's something in there for everybody. All right, guys. Have a good one. Talk to you later.